eventually.
Definitely, definitely. And Cynthia emailed me this weekend asking me to send her this chart again because it is so shocking, even to me, every time I see it, that Bitcoin and M2 liquidity. If you lag Bitcoin by 3 months, or in other words, shift the liquidity ahead to forward look at what might happen to Bitcoin, it is spot on the money again. Let me go ahead and just draw a fun little line here of where Bitcoin just went, right about there. So if you've been following this chart, which hopefully you have, here's my current beautiful drawing. That's about what Bitcoin just did over the last couple of days. Of course, we've got a trade on it in the perfect Bitcoin trade up nicely right now. It was 180%, 170%, not even at the full profit yet. It's getting close, but a nice little trade here to capitalize on this big old wave of Bitcoin. And look, if you're looking at the money supply, we're not done yet. So yes, it's almost at that target I gave you guys. I think it was about a year and a half ago. I said in this cycle, I expect 125 on the low end, 125,000 for Bitcoin,
Mhm.
150 on the high end, and we are, I think we hit 123 last night. So chugging along nicely, taking advantage of it. I hope you guys are too.
Yeah, I mean, I hope obviously that people are making money in all kinds of different ways, being members here and Opening Playbook and joining the sessions. But Bitcoin specifically, I hope hopefully people are taking advantage because I feel like that's still even as we get into later 2025, a little bit of a behind the scenes. Like a lot of people don't really want to talk about it as a regular asset that you can trade and take opportunities on. And so hopefully you guys have been able to take full advantage of that. If you took any of those kind of jump trades or wrap orders or whatever that we've given out for free, if you took the two-way trade from last week, or like Graham said, if you're in his straight up directional plays, lots of good opportunities there. So hope you guys have been taking full advantage. All right. Oh, Graham, I'm now catching up on your Telegram. Congratulations.
Oh,
Thanks.
thank you.
Thanks for sharing with Telegram before me. It's I feel
Oh, you knew.
totally
Don't
totally.
pretend. You. The reason I know Nate knew is because I'd spitball some different names with him,
Yeah,
and he
that's true.
hated my first name idea. So
Did I hate it? I don't remember hating.
I don't know. I don't know. Hate's a strong word.
Yeah, I
He
feel
wasn't.
like we'll let Opening Playbook name the child. I think that's only fair.
Yes,
Just
yes. We'll do a poll.
we'll just have a poll. Have you guys name Graham's kids
We'll
moving
name him
forward?
Bit and the next one Coin.
Perfect. Yeah. So Graham, six more, and we'll be right there.
Yep.
Which I know is what you're going for. All right, guys. Well, let's jump in. Hope you guys had a great weekend. It was a nice, another hot weekend up here. It's been the hottest summer that I can remember in forever. And so we were out, doing the pool and all that good stuff with the kids. But back to business today on Monday morning. Pretty typical agenda for us on a Monday, talking about what happened over the weekend, looking at our market outlook. I always like to do a quick recap of the sectors, kind of where they're at, so we're not losing sight of what's going on. Weekly levels to watch, some top ranked stocks, and then our lesson of the week. Graham's also got another perfect income opportunity lined up. We'll talk about that, I think, at the end. But let's jump right into the weekend news. I narrowed it down to the ones that I thought mattered. I mean, there's more going on here, but the tariffs and Bitcoin, I think, are the two most impactful things happening right now in the world. So I personally think that the tariff announcement over the weekend is a great example of what we talked about a couple weeks ago of the market just getting used to this now, shaking off Trump, not reacting in big, super aggressive ways, and just kind of getting better at pricing in Donald Trump. We had a little bit of a 200 point there, which honestly is not that big of a deal right now, especially with where the markets are. And it basically was break even within a couple of minutes of the market opening. So I think that the fact that we also had a surplus hit in June. I don't know if you guys saw that first surplus in the market in the last 20 years. It's also going to give a lot of pause to the tariff freakout. Now, I've shared all along that I'm a little more optimistic on tariffs than the average person. I'm not like, gung ho and think we should tariff everything and 100% tariffs. But I'm a little more optimistic than the average person. And I think that surplus is going to give people a little bit of pause here to, just kind of relax and not flush the market by 5% anytime there's a new tariff. On Bitcoin, we already talked about that. Hit 123. I think the initial target that we had of 125 feels, like it's going to hit at any time by the end of this session, the way that Bitcoin is moving. And then the question, I think, from there is where we go in terms of peak upside, because Bitcoin is an asset that it could go to 150 next week, and it wouldn't be like that shocking. Some people had it projected to go up to 260 or 270 in this cycle. So the range, Jeffrey had it pegged at 150 for this cycle. Graham and I were both in that at least 125, maybe into the 150 range. But then there's people who have it all the way up into the 250, 260, 270 range. So that brings in so much potential for Bitcoin. The way that I'm going to do it, guys, is when it hits 125, I'm going to start taking profits. If it hits 140, I'm going to take some more profits. And then I'll probably always have some of my, kind of quote unquote leave a runner on for Bitcoin for, if it just skips 3 cycles and goes to $500,000 a coin, I want to have some exposure to it. So that's how I'm going to handle Bitcoin. If you look at the market, like I said, not a whole lot here to say for me. I think it's in that cool off period. We've got to be patient if you want to play directionally, because I think we could break down and get another test back in the 600 range. I think more than likely we'll kind of stay range bound until we're ready to go higher, especially with what Bitcoin is doing and seemingly leading the way on the risk on assets. I mentioned that I think the Apple, Google, Tesla side of things in the Mag 7 still lagging behind and having so much upside potential. Feels optimistic to me as well that if those kick into gear, we could see some higher highs. So I'm pretty optimistic, but I'm not really going to get super directional until we make a move, out of this range. Bitcoin, like I said, there it is, just a monster, purest momentum trade out there. If you think it looks overextended, yeah, it does, but just go back a little bit and look at other quote unquote overextended periods. I mean, let me get my pen out real quick here just so you can draw an apples to apples comparison.
Just so people get a little understanding, Bitcoin is a heavily shorted asset, and it very often squeezes, kind of like if you remember GameStop, what happened there, or some of the other names that squeezed during that time. I've actually got an indicator, and it's right at that squeeze line, a little higher, and a lot of shorts are gonna have to cover, forcing it even higher.
Interesting. Okay, so you guys can see here, just in this run from 110 to 123, that's about a 10% run. But if you look at this one, this was like, 65. This was like 10% right there. So you guys can see 10% here versus 10% here. And obviously it was not not nearly done. Now it did cool off a couple times throughout the process, but it went up about 25% before it even had its first cool off. So again, I don't think, 130, 140, 150 is out of the equation for Bitcoin. I don't think it's guaranteed. I know other people say 150 guaranteed, it's happening whether you like it or not. I'm not that confident, but I think it would not shock me if we come back next week on a Monday outlook and Bitcoin's at 140. So it's just a matter of how you want to play it and manage it. By the way, I always show this chart. Insiders still not buying, no action from the insiders. They obviously feel like things are still kind of overvalued because they're not buying stock. They're still in a selling phase. And so take it, with a grain of salt. They've been wrong a lot the last 2 years. But I think this is just an interesting thing to see that we have not seen people step in on individual stocks and say, hey, they're undervalued, time to buy. But we have seen institutions start to step in. Now, last week was more of a neutral week. If you just look at the heavy order flows, more of a neutral week than we've had the last couple of weeks. I would assume that's just the market slowing down and not showing direction, but maybe it's telling us that we're going to get a little bit of a correction and a more of a directional cool off here. This was like 3-1 outweighted bullish to bearish the previous couple weeks, and definitely has slowed down here. Obviously, the big bullish stocks are the same they've been: Nvidia, Tesla. We got Lilly, which is one that we've traded a little bit more, kind of as it started to build back here recently. AMD, Oracle, and Hood, kind of all at the top of the list. As you go down, you still see some of our favorites, Meta, MSTR, Palantir down there as well. And then on the short side, a lot of similar names. Interesting to see that IWM bounced back up to the short side here. It was a little bit higher on the long side last week. And after just 2% pop, seems like people said, hey, we saw enough out of IWM. We're back to the short side. It has not been able to maintain, IWM is small caps, by the way, guys, has not been able to maintain any serious momentum here over the last couple years. Every time it seems like it's breaking out and trying to do that catch up, it kind of falters out. We're now at the biggest gap between small caps and large caps that we've been since 2000. So in 25 years, we're at that biggest gap. So I still think it'll catch up at some point. Like, I just think that's the nature of how the market works, but I'm just not confident enough to actively trade that right now. I think it'll happen, and I'll be bummed if I miss out and IWM has 100% year in 2026, but I just don't have enough conviction to trade it.
Yeah, I've been burned on the small caps. Everyone thinks the same thing. Interest rates coming, small caps should rip, they should do well. Problem is, no one knew that inflation would be this sticky for this long, and that's why those things are just getting beat up. Best to just trade the price action. Don't worry about getting the exact bottom, buying the exact bottom. When it starts to go, then we can get in.
Right, and if you like the catch up trades, which I don't have any problem with catch up trades. I mean, MSTR catching up to Bitcoin is a trade that I like right now. But if you're going to trade a catch up trade, Graham, I don't know if you agree with this, but why trade IWM when you could trade Apple? Trade a large cap that can handle all of that pain and still is in an undervalued position.
That's a great one right now. Yes.
And then on the actual equity side, so these are the options, guys. These are the big option orders that we saw last week, the biggest ones. If you look at the actual equity side, these are the ones that had $1 billion plus. Again, most of these are going to be the big names, and most of them are going to be ETFs. They're going to be your IWMs, your SPYs, your VOOs. But we do have some interesting ones here. Obviously, lots of Mag 7. And then we have Cisco, which is one that I've talked about a lot lately. Coca-Cola, normally that's just a safe dividend play that when you see $1 billion there from a fund just rotating into some dividend. But I thought that, Cisco, PG, and then I thought this D-Dog here was an interesting one because you're seeing big S&P 500 funds, Apple, Mag 7, and then you've got D-Dog right here in the middle with 1.7 billion. Graham, I think you've traded that one a couple of times with institutional order flow because it seems one that pops up when there's actually something going on under the hood. So any thoughts on D-Dog making the list here?
I haven't looked at that stock in a hot minute. Do they have earnings coming up by chance?
I assume they do with the
August,
because they almost always show up.
Yeah, they're one that gets a lot of I should say fishy trades that come in.
Yeah.
They tend to have
Especially
some
from the
fishy
Chinese side of things.
Yeah, yeah. So they don't have earnings till August, but I would not be surprised to see it rocket on whatever's going on, whatever's cooking there for D-Dog. That's basically how I've traded it before. I've never really traded it on a technical pattern or a momentum pattern, just unusual orders coming through.
Yeah, it's just interesting when you see all basically S&P 500 and Mag 7 stocks, and then all of a sudden, a stock like that right in the middle with a similar amount of equity pouring in. All right, let's take a look at our sectors year to date. We've talked about this a while, but amazing to see XLI. That's industrial, still just holding its own, churning higher. A lot of that has to do with nuclear having such a big run, but in general, just been the most stable and highest performing sector out there. Communications, basic materials, financials, and then of course technology bouncing back still in this range. Now, I really like this middle of the pack that's outperforming. So industrials, I assume, is going to have a cool off here. But if you have basic materials, financials, technology, I still like those kind of in the middle of the pack. I know that Roger shared that he likes the underperforming one. So Roger likes the staples. He likes the more defensive stocks. He likes healthcare. I prefer to kind of stick with the overperforming, but not quite at the top of the list. So my sweet spot is right in here, communications, financials, technology. But you can see, again, if you like that idea of the catch-up here, consumer staples have actually produced pretty good earnings, been stable, but they're just not exciting in the risk-on environment. So they kind of lag behind. So that's one that you could trade. Roger likes that one. I kind of like the ones that are burning and churning while we're still in this optimistic market. And then once they actually start to slow down, then making a shift. If you look at the 30 days, you'll see XLY actually has really caught up. A lot of that is Tesla ripping, and XLY is very exposed to Tesla. Technology is at the top of the list, but it has been slowing down. If you guys look at that churn, that period that we just showed, let me just flip back to it real quick. Whoops. There it is. Not doing a whole lot. Well, when you see the market going sideways, usually not every sector is going sideways, right? Some sectors are going down, some are going up, and they net out to a sideways market. Well, technology is going down a little bit. It's not crashing, it's not burning, it's not flushing, but it's going down a little bit. And what you're seeing is at the same time, financials have kicked up, energy kicked up a little bit, industrials, like I said, has been strong. XLY kicked up a little bit, and this is all kind of neutralizing. But if you look at the total movement, this is 30 days, guys. Over the last 30 days, technology's up 30%. But over the last 7 days, it's probably down 0.7. Over the last 7 days, industrials are break even. Over the last 7 days, communications are down 0.5%. Over the last 7 days, utilities, financials, energy, they're all about break even. So we aren't really seeing major break and divergence over the last week. We're just seeing everything kind of cool off. And I wouldn't be surprised, by the way, if a lot of that is just liquidity that did shift into Bitcoin, and then will shift back at some point. That wouldn't shock me either. You guys know the draw. I won't waste a whole lot of time here. Infotech should be hot. Energy should be pretty strong. Financials, a great sector. Materials, consumer staples, industrials. July is hot. Okay, everything is going to be green. And for the most part, we expect a little cool off here and then to hit some of these numbers over the next 10 days or so. The second half of July is pretty strong as well. Not quite as strong as the first half, but we've seen the first half underperform a little bit. So maybe the second half will catch back up. Okay, weekly levels to watch. This is one we shared last week on MSTR. Well, boom, there it goes. MSTR now over 450. If any of you guys traded as it cracked above 430, it ripped. I think it honestly still has potential. I wouldn't be surprised if it does rip to $500, just trying to catch up to Bitcoin. And so we'll keep an eye on MSTR. But if here's again, this is our level from last week. It was at 403, looking for it to crack. Well, it's over 450 now. So we've had an over 10% move in MSTR just in the last 6 days. And I wouldn't be surprised if it keeps on going.
And on that note, all of the Bitcoin names are playing the catch-up trade right now. We've got Mara, CLSK, Iron, and Cypher, which is one I gave you guys a few weeks ago. All of them up 5% plus today. Some up 10%.
Yeah. Yep. BTBT, probably the worst of the bunch. It seems to lag the most, but hey, maybe it's the biggest catch-up. About 350, maybe it'll crack to $4 here. Okay. ANET is another one we shared from last week. We were watching that nice $100 level. It cracked it. It hung around 100. We thought, hey, now that it got above that nice whole number, maybe we'll get a jump. And we did. Jumped up to $110, made about a 10% move on ANET. I'm looking for it to rip just a little bit more. I haven't actually looked at it today. Let's see. How are we looking today? Right around 108. Yeah, so we're still right in this kind of pause area, 108. Yeah. I still like it, guys. I still think there's just so much space there for ANET to make a move. New one on the list here, WCC. That's actually a Pittsburgh company, WCC. Right at this $200 level, you can see it came in this range a couple other times and got rejected. Been rallying really hard. If it gets above 200, pretty clear path up to 210, 5-6% move there. WCC, that one made the list because it also has a little bit of institutional order flow, which is rare for a smaller stock like WCC. And then of course Google, talking about catch-up trades, looks pretty good at that 184 break point. Could see a move all the way up to 200. I don't think it's going to be a total ripper up to 200, but I like the potential of Google. And I think that, as far as the Mag 7 stocks go, Google is probably my least favorite. But as we get, some more positive news, the Gemini news has been good for Google. We get some short-term, what I think is going to be a squeeze up to all-time highs on the Mag 7, which haven't quite hit it. Actually, it depends on what chart you look at. Some say that the Mag 7 did hit the all-time highs by a couple pennies. Some say still just short of it. I assume that we'll get Mags to actually make a squeeze well above all-time highs. And if we do that, I like Google's chances to at least get back up into that range, even though it's probably my least favorite Mag 7 stock. The thing is, as I shared last week, I like the idea of trading MAGS as a whole, because whether you just get Nvidia and Microsoft and the top dogs ripping higher and just kind of continuing that pace, or you do get Apple, Google, and Tesla catching up. Either way, the mags are going to overperform. And so I like trading it as a ticker, MAGS. Top ranked stocks. Speaking of those rippers, you've got Microsoft and Nvidia right at the top of the list. CAT, TDS, and then Boeing, which has been a beast. If anyone traded Boeing when it was getting beat up, man, that thing has absolutely destroyed. What 40-some%, I think, from near the lows there on Boeing after it just couldn't get out of its own way. To be honest, that's what I'm pretty disappointed in myself not trading. I'm not someone who trades beaten down stocks very often. I like momentum. But when you've got a stock like Boeing that's totally beaten down, has some of the worst stretch of headlines you've ever seen, and you know they're guaranteed billions and billions and billions of dollars from the government, probably a pretty obvious play that I wish I grabbed some more of. I think I maybe took 1 or 2 trades on it, but never accumulated any shares at all. So a little bummed out that I didn't do something on Boeing as it was beaten down there. And like I said, kind of couldn't get out of its own way. And now has been, on a tear. All right, we're going to get into the lesson of the week, which is that trade size matters. Spend a couple minutes there, and then I'll hand it over to Graham. Before we do that, I did want to talk about the VIX. I like shorting the VIX when it's up 4 or 5%, and the market is basically break even like it is right now. So let me just give you a trade here. We'll go ahead and do it on the VXX. So let's type in the VXX here. And just go to the end of the week. So let me move this over a bit. I'm going to look for a vertical that is just below, basically an inverse wrap order, if you will, on VXX. So we are at 45.40 right now. So basically, I would be playing it to go below 45. So if I just shift over here to the bearish side, boom, you can see the 45, 46. If you go over to the buy side, should be paying. It's actually a little pricey, to be honest. The VIX, has that built-in assumption that it will go down over time. So I don't think I'll pay 65 cents, but if I get in for 60 cents, I'll take it. So let me put an order in here for 60, which might not get filled. It's a little overpriced, in my opinion, to be up in the 65, 70 range. So I'll go ahead and put an order in here for 10 contracts at 60. You can see if I get filled, it's a little less than a 1-to-1, 600 to 400. And I'll just type that in the chat and then I'll throw it in the sheet for you. But that is the buy to open $46 VXX July 18 put. It's a sell to open the 45 VXX July 18 put. And like I said, limit order for 60. Good chance we're not going to get filled on this, guys. It's to me looks overpriced, but we'll see. I'll put it out there, and we'll see what happens with that one. Let me just go ahead and throw it on my trade sheet real quick. Give me 2 seconds here for all of you Opening Playbook VIP members who like to have your trade sheet updated. Don't want to leave you hanging. So this is a volatility fade. All right. Let me. You guys enjoying staring at my screen as I try to figure out how to use a trade sheet? Sorry. It's me trying to get all my Zoom controls and everything else out of the way while also typing things in. All right. There we go. So that trade is in there for you. Like I said, pretty decent chance we actually don't get filled on that trade. But I wouldn't pay more than about 60 cents for it. Okay. So let's talk about why trade size matters, which I'm sure is self-evident, but I think is still a good lesson just to kind of think about because I think one of the most common challenges that I see with retail traders is that they go on a good run, then they increase their size and they take a loss or a stretch of losses and they turn a net profitable system into a net loss group of tradings. Okay, so let me ask you this question. Just be honest. Has anyone ever done this? You have 20 trades, 10, 15, 20 trades that as a set of trades, if you are consistent, they should be profitable, but simply because of your trade size, they are not profitable. I'm sure. Okay. Yes, 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 yes. Getting a lot of yes. Jennifer says, oh my lordy, several times. Too many times. Yes, 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 more than once. A lot of you guys are chatting only to hosts and panelists, so not everyone's seeing it. But yes, there's a lot of yeses flowing in right now. It's very common. And the reason that it's very common is because we're humans and we like to do things. We like to try to capitalize. We like to try to, kind of put our finger on the pulse. And we, well, great. And Bodine says, I usually do the other thing. I'll take a couple losses, reduce my size, and then make nothing on the next winner. Very, very easy to happen. So let's actually just look at some numbers together on how easily this can happen. So here's this handy dandy sheet I put together for you with 20 trades. And so what often happen is you'll have a stretch like this where you get on a good run through 13, 14 trades, just like you see here, where you have a nice profit. And right about here is where most people start increasing their size, right? Now, with these 20 trades and $1,000 in each trade, the net result is plus 1770, which is a really good net result because it's plus 177% return on risk over a set of 20 trades. So if you make those 20 trades in a month, you have 177% ROI, return on your risk on just that month, which would be fantastic. But like I said, usually what happens is right around trade, 10, 12, 13, we start increasing our risk. But the problem is most people don't increase their risk by 5%. They get pretty aggressive. So they come in here and they throw $2,500 into a trade after they've been, doing $1,000 per trade. And all of a sudden, their net result looks something like that. So when you increase your size at the wrong time, you can turn the exact same flow of trades that should be positive into a negative set of trades. Now, what a lot of times will happen is traders will make it even worse. They'll go to $2,500 here, they'll lose, then they'll go back to $1,000 here, and they'll win. And then they'll go back to 2,500 and then they'll go back to 1,000 because they lost, and then 2,500, and they'll really just make it bad by kind of bouncing around, ping-ponging around, trying to pick the best, opportunity for a winner that just compiles their losses. So this is pretty crazy if you think about it, because you went from plus 177% return risk to negative 260% return risk just by trying to pick your own size. Anyone ever done that? Myself included. Now, the answer to this is obviously simple, right? We increase our size based on a systematic approach. It's just easier said than done. Most people get in flow, they're happy that they've won some trades, and then they, decide, hey, I'm going big on this particular trade. So let's just do it let's just go through it based on the, true math of the situation. Let's say that you have a $10,000 account, right? And you're going to increase your size simply based on the size of the account and the relative return. Well, when you were up 17% on $1,000, your account would be up, $170. So this trade, you would only risk like $1,100, right? And then you make a little more and you'd risk $1,200. And then you'd make a little more and you'd risk $1,300. But so then you'd lose a little bit and you'd go back down to about $1,050. But then you have a really nice winner. Your account would be up, so you go up to about $1,300, right? And then you go up a little bit more, $1,400. But then you'd lose some and you go back to 1200. Didn't make much. Oh, sorry, you went down a little bit there. 1150. Didn't do much there. You keep 1150. Okay, lost some there. Back to 1050. Sorry, I'm doing my math backwards. 1200. 1100. 1200. 1300. 1400. 1300. 1350. 1250. 1150. 1,000. Or sorry, that should be 1100. Okay. So all I did just now was, instead of jumping my trade at a random spot, I just made it somewhat reasonable based on your account growth. And by doing that, we actually took the profit up a little bit from a 170% return on risk to a 200% return on risk. And that all we did, we still took all the same losses. We still had some bad timing here where we increased our size and then we took a loss. By the way, guys, just to be clear, that will still happen. Anytime you are trying to manage your account and increase your size, you will sometimes increase your size and then take a loss as soon as you increase your size. That's fine. That's part of the game. What you can't do is triple your size, then take a loss, then bring your size back to, what it was previously. So something like this is totally in control. Now notice the biggest jump there is like $100 in your trade size, right? Because you don't triple your size because you're on a good winning streak. You increase it with the overall level of the account. And the overall level of your account, assuming that you're risking a normal portion, you're risking a couple percent of your account, isn't going to change all that much. All right. So I just wanted to show you it in real numbers because I think this is one of the biggest things traders can run into. I actually know this very well because I have students now. So a couple years ago, I only knew for my own account. I only had an idea for my own account of how this can happen. But now I have students who trade my services and my strategies. And so I know times 100 how this happens. And so I get people all the time saying, Nate, I won 8 in a row and then I blew it all up. And I'm thinking, well, how could you win 8 in a row and then blow it all up? Well, it's because of trade size, right? And if you just say, listen, I'm not going to get greedy, or the opposite, I'm not going to get, too fearful, and I'm just going to use reasonable trade size based on my account, something amazing happens. Do you guys know what happens? It's actually really incredible. What happens is that when a strategy is profitable, you're profitable. That's an amazing thing, because the average retail trader out there, I'm just being totally honest with you, the average trader out there will take a profitable strategy and trade it unprofitably because they don't have consistency, they don't have consistent trade size. So if all you do from this moment on, July 14th, 2025, this moment on, is you say, I'm going to be consistent, I'm going to trade consistent risk associated with the size of my account, then this amazing miracle in your trading account will happen, which is that if a system is profitable, you will be profitable and you won't ever have to worry about blowing that up again. So I think that is a really important lesson. Hopefully that sets in. It's simple, nothing crazy there, but just sits in and you realize, geez, I have access to all these profitable trading strategies. If all I do is hold up my end of the bargain with discipline and risk management, if the system stays profitable, I will also be profitable. I think that you'll have a major milestone in your trading. So 3 simple rules here. Again, increase slowly and systematically. So have a reason for increasing. Not you feel good, not Graham and Nate are aggressive this week, so I'm going to be aggressive this week. Just slowly and systematically. I think the easiest way to do that is based on a percentage of your account. By the way, sorry guys, I'm still a little congested here. One of the best things about the strategies that Graham and I trade with these inexpensive debit spreads is that they're the easiest ones to scale, right? So if you're trading a swing trading system where you're buying $4,000 or $5,000 calls on MSTR, it's going to be really hard to increase your size slowly and consistently. right? Because if you have a $10,000 account, how do you, slowly and consistently increase $4,000 options, even $1,000 options? Really, really tough. But if you're trading $50 debit spreads, $120 debit spreads, then you can place a system where you can increase slowly and systematically. Point number two, don't try to time. Right? Say, this is the week that I think we're going to hit a big winner on overnight options. This is the week that we're going to hit a big winner on dollar trades. You don't know that week. We don't know that week. We believe the system has an edge over time. Kane always says this, and I love it. He says, you can never exercise an advantage over one trade. You can't use an edge on one trade, which I love that. You can only use an edge on a series of trades. Well, what a great thing to keep in mind as you think about trade management. There's no such thing as an edge on one trade. There is only such thing as an edge over a series of trades. So don't try to time it. Don't try to make one trade make or break your system. And then lastly, this one's really important. Don't adjust your strategy, right? If you have a system and you have an edge that you're trying to deploy over a series of trades, and you decide, hey, I put on more size, so I'm going to, get out earlier. I'm going to use a different target or whatever. You're also blowing up the edge just like you would if you actually change the size of your trade. So those are three very simple rules. Nothing, nothing crazy in there. No rocket science in there. But if you just do those things, then like I said, something pretty amazing happens, which is that if you do have an edge and you use it consistently, you'll make money. You'll be guaranteed to make money if the system makes money versus the system making money, the model portfolio continuing to grow, and you somehow losing money. So that's the lesson for the week. Those three rules, hopefully, take them and use them to heart. Easier said than done. That's the problem with trading, right? I can give you those rules all day. A lot easier said than done. As the market's raging and you have a trade that's down, you have to actually commit to it and not let your emotions get in the way. So hopefully that's helpful, even though it's simple.
Yeah, and just to add to that, I posted in Telegram last week, and if you have a system that works, I'm not talking about blindly guessing on a stock that looks good and winging it. I'm saying if you have something that's repeatable and you can do it over and over and over again, embrace the losers. And that's not fun to say, but when you know you have a profitable system over time, it's okay to take losers. Don't see it, freak out, and adjust your position sizing like Nate's, don't scale all the way back or scale all the way up. Just stay consistent, and that's how we've seen the best traders grow their accounts over time. So don't be afraid of losers. Know it's part of the game, but know that every time a loser comes, that probably means your odds of winning are increasing if you have a system that's profitable over time.
Yep, absolutely. All right, Graham, do you want to tee up a little bit what you've been talking about a lot lately with the risk reward and the profit factor and all that?
Yeah, definitely. And real quick, if you guys are looking at the markets this morning, we've had a very, very dull open to the stock market, all chop all around. It has barely moved at all this morning. I posted earlier that I expect this sort of dull movement today because we don't have anything exciting today. Instead, people are embracing what's going to come tomorrow morning before the bell, 8:30 a.m. We have our CPI report, which is our big inflation metrics. That's going to move the markets up or down. Of course, we'll cover it right here at 10 a.m. tomorrow. In the opening playbook, we also have PPI, which is another key inflation report. And not just that, later this week, we have earnings starting up again. We have JP Morgan, Citi, Wells Fargo, all before the bell tomorrow. And then the airlines start kicking in. Netflix Thursday after the close. So we're going to see some volatility start coming back into the markets here. So it's good we've had this cool off phase, this little chop here, this sideways trading action. But it's all about to pick back up again starting tomorrow. And it would be crazy to me if it didn't, because these are very volatile events. With that said, even throughout the chop here, last week, markets didn't really go anywhere fast. We ended up closing out three winners with the dollar options. You can see we had Robinhood here, 50-cent entry, doubled our money. GEV, $1.20 entry, doubled our money. And Meta, we didn't quite get double, but hey, we got 37%, 3 for 3 on the week. Hopefully you guys were able to take advantage of this. Post in the chat if you were able to jump in on the dollar options with the perfect income trade with me last week. And the reason I want to bring it up again today is because we get this type of opportunity each and every week. Now, what's really special about it is that to get these doubles, we don't have to see stocks move 2, 3, 4, 5, 6, 7%. to hit the results here. So even during a choppy time like we're seeing right now, all we need a lot of the time is a stock to drift 0.2%, 0.5%, less than 1% in a week. Of course, it can go much higher, but even if it barely budges that week, with the way we're rigging up the options market, we're able to target a 1-to-1 risk to reward. In other words, risking a buck to turn it into $2. Now, the reason that I truly believe this is a hack is because over time stocks go up. About 70% of the time, stocks are going higher. Yet we're able to get a 1-to-1 risk to reward betting on stocks to go up. So to me, that's an unfair advantage that we now have in the options market, and there's nothing the market makers can do for it or do about it. They can't change it. They'd have to reprice all of the options out there, which would then open up other advantages in the market. So they're going to have to let this one slide for now, and we can take advantage of it week after week. So even if the markets are a little bit duller this week before the earnings events and CPI, PPI, I'm still going to be targeting my next double this week and stacking it up each and every week. So it looks like we had Brandon take all three. Ben got two of them. Keith
Larry
got
and
two of
Clyde
them.
in there.
Clyde worked for me. Love it.
Uh,
Awesome. Well,
yeah, the math. I mean, the math on that obviously it is really the craziest thing because Graham and I mean, you could use any analogy you want, horse races or whatever else, but like I always say the biggest advantage that we'll ever find in the stock market is that stocks mostly go up, right? That's why you guys will hear me say like almost everything I do is bullish because when you're looking for edges, and I've done this because I've tested millions of strategies and banged my head against the wall testing every combination, you're looking for little, tiny percent edges. The biggest edge you can start with fundamentally is that the market is going to be more bullish over time than bearish. Take Graham's wrap orders and do a strategy test where you just do one every week on the SPY for the last 30 years, where one's bullish and one's bearish. You're going to see very, very, very different results, right? Because the market is more bullish. And so the crazy thing is, given that, you wouldn't think that you'd be able to make these 100%, these 1-to-1 ratio trades. It's like, imagine if Vegas opened a game where you could go roll the dice. And if it was 1 through 4, you'd get, a 50% payout. And if it was 5 or 6, then you would lose. Well, I don't know about you, but I would, sell my house, move to Vegas, and just go roll dice for the rest of my life because you would be a, billionaire after a week of just as many rolls as you could get in. And so that's the kind of advantage. Obviously, not the same because stocks could just go down for 20 years and we don't know. But the same concept is that an edge that we know fundamentally exists, but the odds don't match up with that edge is a very, very rare thing in the stock market. Because that's why, we get so excited about this kind of stuff where you can get the returns. I did a whole thing on pot odds, same idea, but you can get the returns that literally don't line up with the edge. And so when we say, oh, it's a market hack, it's not just like hyperbolic, like a cool thing to say. We're saying like literally the odds do not match up with how the market moves. And so that's actually a legitimately extremely rare thing to find in the stock market.
yeah, and we don't have to win every time. Again, we're not trying to guess or time up the markets. We're just playing these rigged odds that we now have week after week after week after week. And you can see here, again, I did that whole spiel on profit factor and why it doesn't matter, win rate, why it doesn't matter. And the most important thing to me is average return. That's your average of winners and losers. After about 18 months of trading, we are at about 33% a week on average. That's because each and every one of our winners is shooting right around double our money. You can see our average winner is 93% in a week. And we're stacking that up over and over again. And this is the number that really shocks me. And you don't have to start out with $5,000. But if you start out with $5,000 over the last 18 months, you're at $153,000. So Nate talked about being smart, staying consistent. If you were just consistent with this and never got too greedy or too fearful and just stay consistent, look at that, 5K into 153,000. That's on real life published alerts. That's not a back test or anything like that. If you started with $1,000, you're still looking at like 30 grand. $1,000 a week stacks up to 30 grand just by rigging the options market. So I'm going to do it again this week. And as a matter of fact, I'm going to do it again starting today. I'm going to get a trade out here in the next hour or so. Now, if you guys didn't get a chance to catch the presentation and see how we're trading these dollar options, again, call them dollar options because they normally cost right around $1 to enter. We always shoot for double our money.